I might get some more analysis on this. Chris Weston, IG Chief Market Strategist, joining us now from Melbourne. Chris, good to see you there.
Morning.
Any thoughts maybe just on that news? I mean, how much do you think the worries about Banco Espirito Santo were playing into the market losses last week? Is that going to bring any relief, perhaps, do you think, today?
Well, I saw the headlines flash myself across Bloomberg screen, and we haven't really seen anyone coming out and buying the euro, which you may expect to see a bit of an exaggerated move at this time of day because liquidity is quite thin in the ground. So we haven't really seen anything yet. Maybe the market just hadn't had a chance to react, and of course, there's still a lot of Asia which haven't come in yet. The issue for me is, is European markets have been hugely underperforming over global markets, and if you look at the price action on the S&P on Friday, as soon as the European market closed, we actually saw some buying coming back into the US market. So we do know that Europe is looking soft. I mean, the Euro stocks market has dropped, over 7% since the mid-June highs there. So I think the Espirito Santo situation is playing into sentiment in the region. If you look at the level of hedging that's taking place in Europe now, I mean, the futures contracts that we look at every week, the CFTC data, they blew out 20% last week to over 100,000 short contracts. So it's clear that people, foreigners who are holding equity in Europe, whether that's Portuguese equity, whether that's German or French or whatever it is, are now having to hedge some of that euro exposure because you're getting that double whammy of the equity market going down but also the euro going down as well, so you might as well neutralise your euro exposure there. That's what we've been seeing. I'm not exactly sure what happens here with the Espirito Santo. I'm not sure how much the lifeline that they've been given is going to cover the holes that they have in their balance sheet. We know that they're going to be split into that good bank, bad bank situation I just heard you say there. I'm not exactly sure how many good assets they actually have or how many bad assets and how that's all going to work out. Obviously we have to go through a little bit more with that. But yeah, I think this is one of the issues that have really plagued the European downside that we've been seeing. The other, of course, is what's happening in Russia and Ukraine. We've seen Volkswagen, Siemens, Adidas as well coming out and downgrading their full year numbers. So there's been other issues at hand other than this Banco Espirito, but the Banco Espirito is key because they are one of Portugal's biggest lenders, and that's probably why the government have decided to stand by them in this regard rather than letting them go to the equity market and tap investors there. So this could be a good situation. We haven't seen any impact in the markets just before I came on air though.
Yeah, one we might check in with you and get a little bit more on perhaps later in the session, if we could, Chris. Just wanted to ask you too about your view on the non-farm payrolls, because yeah, it missed, but not by much, and some of those other measures, surely it's a relief to markets that have been worried the Fed might bring forward when it might start raising rates.
Well, according to Richard Fisher, who's the Dallas Fed president, came out in an interview on a TV program on Friday that the chance of getting what they call lift-off or increasing the Fed funds rate or short-term interest rates has moved closer. That date is there, and he sort of said there's other people on the panel on the Fed board who believe that could be the case. I mean, I'd looked at market pricing this morning on CME data, and the prospect is that we get a July increase, but that would probably be, for me, June would be a much sooner date, given that's when we get the next, June 2015 is when we get the press conference meeting attached to that. I actually thought it was quite a disappointing number, to be honest. The headline jobs numbers was a touch weaker. The prior month was revised up, which is obviously a bit of a mitigated some of that. And the other positive situation is that we saw the participation rate actually increase about 10 basis points. But the thing that I'm looking for is more of a sort of macro trader, someone who's looking very much at Fed policy to drive all different different asset classes. The key things that the Fed are looking here is slack in the labour market. And whilst the participation rate did increase, if you look at the U6 unemployment rate, which is what the Fed have talked about a couple of times, which is the broadest measure of unemployment, that actually increased 10 basis points to 12.2%. So that's really not going to spur the Fed into any kind of life. And of course, after we saw the employee cost index earlier in the week last week, which increased 70 basis points, which was a very strong number, the average hourly earnings, which were unchanged on the month and up 2% on the year, just below expectations, 20 basis points below expectations. Yeah, that was a little bit disappointing for me, and I think the front end of the curve is what you've got to be looking for in the Fed in the US above all else, and you can see that the 2 years did come off 5 basis points. I think that told you a pretty clear story there.
I've got to ask you then, how is all that going to wrap up and affect us at the Open?
Well, I think it's going to be a fairly ugly open, to be honest, Bridie. We're calling it down 30 odd points, so about 0.7, 0.8%. BHP's down fairly hard on the market on the open there, so it's going to be a pretty disappointing open. I think banks are clearly going to be in focus there. I heard your comments about David Murray potentially imposing a similar sort of Dodd-Frank type initiative here in Australia. So therefore banks are going to be very much in focus to see whether the market actually puts any traction on that idea. And of course people are going to be positioning ahead of the earnings numbers. So I think you're going to get a lot of institutional strategists going out to clients today, if they haven't done already, and just sort of talking about what stocks they think have the biggest risks around earnings season, and just try and promote some positioning ahead of that as well. So big day, but it's not going to be a particularly great open, to be honest.
Just quickly on the dollar as well, the local currency, we've got retail sales number due out a little later this morning. What's the market positioning ahead of this?
Well, markets long Australian dollars on the futures positioning. I mean, we're probably the highest level of net long since, April 2013, to be honest. So there are downside risks based on that. I mean, obviously the market can get longer, I suppose, or buy more futures contracts. But I think not really. I don't expect this to be a major market moving event, to be honest. There is so much more to look out for this week in terms of the statement on monetary policy on Friday, of course the RBA statement tomorrow, and then we've got trade balance numbers which have shown some signs of deterioration of late. So I think technically the market wants to push it down a little bit. If you look at last week's price action, certainly we broke out below the bottom end of the range. But I think it's interesting. Quite a wide spread today, to be honest. I mean, AMP are calling for 0.6, and then NAB are actually calling for unchanged. So, the market's looking for 0.3. Get a big miss, and maybe you get some downside here. But an inline number shouldn't really promote too much change.
Chris, as always, great to get your views. Chat to you a bit later. Thank you.
Thanks, Bridie.
Chris Weston there from IG.